We protect our cars, our homes, even our phones. But what about the one thing that actually pays for all of it? In this explainer, we're going to dive into a really powerful strategy to protect your most valuable asset, your income.
So let's start with a serious question. Really think about it. If your paycheck just stopped tomorrow, say because of an unexpected illness or an injury, how would your family actually cope? It's a tough thought for sure, but it is absolutely crucial for your financial security.
And that's exactly why we need to reframe how we think about this. This isn't just a policy that only pays out when you're gone. We're talking about a proactive living strategy, something designed to build your financial strength for whatever life decides to throw your way.
So we're looking at a plan that really does two things at once. First, it's like a shield, protecting you and your family's finances while you're alive. And then it transforms into a gift for your loved ones later on.
Most of us think of life insurance as something that only helps our family after we're gone. But what if that's just half the story? What if your policy was actually designed to be a financial lifeline for you, right when you might need it the most?
Well, this is where something called living benefits come into play. Just think of them as special features or riders that you can add to a policy. They let you access a chunk of your own benefit early if you have a qualifying medical issue. Let's break down the three main types.
Okay, first up, we have the terminal illness rider. It's pretty straightforward. If a doctor diagnoses you with a condition where your life expectancy is, say, 24 months or less, you can get a large portion of your benefit right then and there. This gives you the freedom to manage expenses, get your affairs in order, all without that crushing financial stress.
Next is the chronic illness rider. And what's really important to get here is that this one isn't tied to a specific disease. It's all about your ability to care for yourself. If you can't perform at least two of these essential daily activities for a long period, you could qualify to get a monthly payout, often around 2 to 4% of your total benefit, to help cover costs like long-term care.
So what are these daily activities? Well, as you can see, they're the absolute fundamentals of everyday life. Bathing, dressing yourself, using the restroom, getting in and out of a bed or a chair, continence, and feeding yourself. The inability to do just two of these can be enough to trigger that benefit. And finally, there's the critical illness rider. This one covers those major, life-altering health events that you can definitely survive, but often come with just overwhelming medical bills. We're talking about things like a qualifying heart attack, a stroke, or a cancer diagnosis. This benefit gives you a lump sum of cash to help you focus on what really matters: getting better, not paying bills. Now, this is so important to remember. The specific rules, how much you can access, what exactly qualifies, it's all going to be a little different from one insurance company to the next. So the most critical step is to really understand the fine print of any policy you're looking at.
Okay, so how do these benefits come together to build something truly powerful? Let's walk through a four-step strategy that shows how this protection can go from being just a safety net to a source of income for the rest of your life.
Here's the basic framework. You start by activating the policy, then use those funds to immediately replace your income. After that, you strategically reallocate the money, and finally, you create a brand new, sustainable income stream for life. Let's see how that works. So, let's picture a 35-year-old professional. They have $1 million policy with these living benefit riders. Then, the unfortunate happens. They suffer a qualifying critical illness and have to stop working. And just like that, their income is gone. So they activate their policy. Because of their condition, they can get their hands on up to 90% of their policy's value. That's $900,000 tax-free. This lump sum is now there for them, not just to survive, but to build a whole new financial future. So, what happens next? This is the real magic. The money isn't just spent until it's gone. No, it's strategically moved into a special kind of financial account, an equity-indexed annuity. Put simply, it's designed to protect your money from market losses while still giving it a chance to grow. But the most important part? It's built to generate a guaranteed income stream for the rest of your life. And the result of all this? This one strategy could generate $84,000 in annual income for life. That's actually more than their old salary. They haven't just replaced what they lost, they've created a future of security and even abundance.
Let's just pause for a second and think about what this really does. It's income protection when you're sick. It's a retirement rescue when you can't work. And it's legacy planning, all rolled into one smart strategy. You create an income you can live on while still preserving wealth you can pass on.
So if this idea of turning protection into a lifetime income stream is starting to click for you, the next logical step is to see if a plan like this is actually a good fit. Qualification really depends on a few things, like your age, your health, and your financial goals.
To explore if a customized plan could work for your specific needs, you can schedule a totally free consultation with Curtis Andrews. He's a licensed financial professional, and his contact info is right there on the screen.
And hey, to make it even easier, you can just pull out your phone right now and scan the QR code on your screen. That'll take you straight to a place where you can learn more and set up a time to chat. So we'll just leave you with this final thought. Take a moment and really consider your own financial plan. Is your income, your most valuable asset, truly shielded for the challenges of today and secured for all the possibilities of tomorrow?
It's a really critical question to ask yourself. And please remember, all the information in this explainer has been for educational purposes. Thanks for joining us.